Good morning, ladies and gentlemen. From all of us at NDP, welcome to the third quarter investor relations webinar. I believe we have around 15 of you logged in. We have with us, along with myself, Orphan Faizan, our CFO, and the investor relations and finance team's hand to help me take any questions one of these. What we'd like to do is to take you through the results presentation for about perhaps 20 minutes or so, and then take questions and make the interactive as well for the remainder of the session. Let's see the benefit of those of you who are dialing for the first time or engaging with the first time. Just as well a bit of time on the first slide really focuses on the revamp, vision vision, and the 7 pillars on which our strategy builds. So, of course, sometime during the early part of this year, the bank collectively took a decision to revamp the strategic process of the bank, which previously to become a world-class Sri Lankan bank. And as a management team, along with the board, felt that statement had outlived its purpose, having been in existence for more than a decade. And in the context of where Sri Lanka is heading, especially after 2006, we believe that empowering people, empowering communities, and empowering businesses, and positioning ourselves as a critical catalyst in this empowerment. Hence, the revamp is the driving force for a financially empowered Sri Lanka is the view. And from a mission point of view, the core values of the original mission still remain, but the focus again it drives on being a critical catalyst and empowerment for Sri Lankan entire ecosystem of mathematics to center themselves, become more robust, and individually and collectively drive the nation towards economic prosperity. And in this whole process, the tagline of the bank has also changed to a very simple to understand 2 words. It is effectively our commitment to very easy to understand this word from security guard at a branch to the East View of the bank. Also, collectively developed bottom-up engagement top-down and being embedded and in terms of the values, again, we took out a couple of values from more attributes rather than values, and we introduced a couple of values which we thought were important. The 2 new ones we brought into the accountability and sincerity. We believe that being accountable for our actions, whether we do something brilliantly or whether we do something not so good, we have to be accountable. Only sincerity spirit that collectively results in transparency and the way we public failure to investing stakeholders like yourself. So it was again as a result of some critical soul searching that we revalidated the 5 values in support of the vision and mission statement. And for again, the benefits of those who are dialing in newly to us to remind the seven pillars
Yes.
form the anchor of our strategic direction is at the apex and the bottom we have a very solid, strong corporate governance, compliance and risk management framework which underpins as the umbrella giving shelter to a strong foundation which is the profitable balance sheet growth. It's very important. And within that house, we have five other pillars, which is operational excellence, to be as good as what you can get in terms of the wheel which supports the business, the importance of having a very strong sales culture, because without sales there is no business generation, higher than average fee income, and we'll talk about that when we talk about numbers. The focus on cost optimization. In this bank, we have gone away from the word of cost cutting and cost reduction, because what we believe is that if a cost element is relevant to generating business, we support it as long as it is optimal to the organization. And last but not least, a best-in-class and engaged and inspired team. And I think that again we believe, in addition to the importance of capital, technology, the people factor in banking is absolutely important. However, we look and talk about digitalization, it is the connect between people that makes banking the business we are in. So again, a very quick validation of our vision, mission, and the set of core pillars which anchor our strategy. Looking at the performance, if you look at the third quarter, and this the first numbers are the year-on-year numbers, you see the assets having grown in a snapshot by 9.2%, loans and advances by just under 17% to 198 billion, deposits at 12.5% to 169 billion, the three key elements of the balance sheet. And from a market share perspective, we are at 4%. Again, I think we have not grown the share from December, but I think we have defended our share amidst the competition. But I think I would like to again reiterate our medium-term aspiration to become a systemically important commercial bank, so that the importance of crossing the 5% market share is absolutely important sooner than later. In terms of the income statement elements, our NII remains at 5.7 billion, a dip of just over 4%. We'll talk a bit more when we come to the slide. Other income has shown a 5.3% growth in the 9 months, which I think in the context of an overall environment has been quite good. But I think if we look at this 5.3%, and if we take away the one-off opportunities we had from ALM gains last year, the core banking business has brought about a rise of something closer to 20%, which we are very pleased about. So I think that's very, very important to make sure that the core business is bringing the right sort of yield. Impairment to date stands just under 500 million, so it's an increase of 78.2 million. We'll spend we'll spend a bit of time on that as we go into the next slide. And overheads, 16.8%. Now this overheads of 16.8%, ladies and gentlemen, has two elements built into it. If we take the staff expenses have grown over the 9 months at just around 10%, and that reflects the annual compensation review on average, which we budgeted, no issues. Secondly, if we look at the 9 or 10 branches we have opened for this period and the natural evolution of operating expenses, once it's normalized against the and once we take away the deposit insurance, which reflects the growth in deposits, that growth in other operating expenses is around 10%. The 16.8% reflects two things. One is the operating loss which we have provided in the month of September of around 173 million. This reflects the final figure on the internal fraud, which was discovered earlier during the year. We discussed this at a couple of previous presentations. There was a one-off rogue internal staff member who went into connivance, and there was a fraud in 2 branches, which has been identified, and with the netting of the insurance proceeds, which was just under 100 million, the net impact so far to the bank has been fully provided at 130 million. On this particular subject, the 3 people, 2 outsiders who connived with the individual and the staff member concerned are behind bars at the moment, and there is a criminal prosecution going on. We still have some hope that there would be a further infusion of some monies coming from these 2 outsiders who have perpetratedly taken this money from the staff member. But at this point in time, we have taken a sound business decision to provide the full impact. If anything comes as recoveries in the next coming months, and we will talk a bit more as and when that comes. So once you take away the 173 and normalize for the deposit insurance rise, the normalized operating other expenses increase is still around 10%, which we believe is reflective of the environment and is something which we can use. The profit after attributable to shareholders, that is profit after tax for the bank adjusted for the group impact, is at over 2.3 billion rupees, which is roughly 1 billion less than last year. And if we pause a bit and spend some time and look at the 3 elements which have contributed to that 1 billion shortfall, roughly 500 million of that 1 billion could be attributable to the above average gains we got last year from ALM activity. There is another 200 odd million, 250 million, which I think is attributable to the margin squeeze which we have experienced in the last 9 months. This is something we'll talk a bit more in terms of the levers we are pulling to combat that, but the combined impact in terms of volumes and margins could be around 250 million. And then the other 250 would be a combination of the normal operating expenses plus the impact of the office cost which we mentioned about. So I think once we take that away, the core banking impact, the core banking operation, what you see is what you get at 2.3, just over 2.3 billion. We look at the detailed income statement again. On the left-hand side, we have a quarter-on-quarter and then the year-to-date on the right-hand side. Again, on the gross income, we have seen a marginal 2% growth in the third quarter. but a flat 9 months, which again reflects the pressures we have had on margins. Our business itself, I think, has seen a reasonable uptake in the third quarter. We'll speak about that in a moment in terms of the balance sheet growth. But we have certainly faced the challenge of margin squeeze in the first 6 to 7 months, which also was combined with a very modest growth in the loan book for the first 6 months. So if you look at the first 2 quarters, our loans grew literally by 0.1% in the first quarter, under 5% during the second quarter, and now during the third quarter we are really seeing the uptake in excess of 10% in third quarter, and I will firmly believe that uptake will continue or even increase in the last 3 months because of the degrowth. But we have certainly faced the worst in terms of the margin impact. In terms of operating income, again, as I said, the non-interest income for the 3 months has shown a 20% growth, and that is coming not from ALM, it is coming from basic core banking. Bread and butter core banking is very pleasing, and we hope to see this contribution increasing and sustained during the coming months. In terms of net operating income as a percentage, if you look at the fee income as a percentage of net income, we have seen a remarkable improvement over the 9 months. This figure remained at 23% as at the end of last year, and as at end of third quarter, it is around 29%. So we have seen a 6% improvement in the contribution from fees as a percentage of the total net income. And then you can see the profit after tax and attributable to shareholders consistent in the third quarter in relation to the 9 months, a dip of just under R1 billion, and I'll explain the 3 main attributes contributing to that impact. Despite that, I think we are very pleased to note that at the end of the third quarter, when we have seen the loan growth going up to 10%, we believe that with the fourth quarter pipeline also in mind, in expectation, that the bank's core business is intact and it is looking right. So we are very optimistic that if you look at a full year, we will be able, some of you who came in and dialed in March for the investor presentation would recall that I mentioned a full year's aspiration to grow the loan book by 20% and the deposits by 17%. And we still believe that for the full year, we will be able to grow a book around 20 or just below 20, and the deposits also around that 15 or 13%. So the basic core business is still very, very robust and optimistic. We have consciously reduced around 20% in terms of the borrowings by redeploying some of our funding mechanisms, which I think have contributed towards the robustness of balance sheet. And I would like to also briefly touch on CASA, because this bank, as you know, has always had a CASA less than the industry. And that is a fact that the deposit-taking history of the bank has just been under a decade in relation to the industry. And if I can just pause on that, the CASA for the 9 months, that is the current account and savings account, have grown by 8,400 million rupees, 8.4 billion rupees. That is a year 9 months growth of 23% in the CASA. That is the overall CASA. Now, of that, if I look at that as a percentage of the total growth in deposits, which was 17.5 billion in 9 months, 48% of the deposit growth for the 9 months has come from CASA, which I think is a very promising sign for us, which also demonstrates the bank's constant focus on this important lever, also to defend any downward pressure on margins. So I think we've had 48% of the deposit growth for the 9 months coming from low-cost deposits, which is promising. And also, if you look at the overall CASA ratio, taking foreign and local currency, it was at 24% as at end of 2014, and as at the end of September, it has gone up to 26.4%. So again, a steady rise in the contribution. And if you look at the rupee CASA, which is your bread and butter, which comes from the branch network, it has increased from 24.6 in December 2014 to 29.5% as at the end of September. So to us, that is going in the journey is going in the right direction, because our medium-term aspiration is to grow that LKR CASA to around 35%, perhaps in the next 80 to 24 months. So I think we are very pleased that that core attribute is sustainable and it is going in the right direction. This particular slide, for those of you who can see it, shows the ROE, ROA. With the dip in the third quarter, the 9 month numbers, your ROE is just under 11%. It is a dip in relation to the 15.8% in 2014, but we have explained the reason for that. And I think we are pretty confident that if we take away the two one-offs, the ALM impact and the operational loss, that we will still be able to defend a medium-term ROE of around 16%. The NPLs, before we get to NPLs, our NPA provision cover as of today, end of September, is around 52%, which I believe is still well above the industry norms of around 40%. The NPLs, from a gross point of view, as at the end of September, is just over 2.7%, which is about a 10 basis points above the second quarter. For those of you who dialed in the second quarter, I think we did mention that we expected the second quarter gross number to come down to around 2.4 to 2.5. We have not been able to do that because of some of the specific impairments which we have provided in Q3. The recovery impact is still going on, and we still hope that that figure will come down to below the 270 basis points, maybe to anything between 240 and 250 during the full year. In terms of the book value, I think we have seen a steady growth in terms of the book value per share. Of course, the EPS has reflectively reduced in relation to the 1 billion dip we had in terms of the overall profit attributable to shareholders. So what is important in this is, in this sort of investor engagement, for us to be consistent and come out and engage with you as a community, stripping out the one-offs and being consistent in communicating our strategy and getting your binding and support. And all I can say as the CEO of the bank is, yes, it has been a tough 9 months, but I think we see the worst of for 6 months, especially from the positive upcoming on the third quarter. And if I may pause there and share with you the three most important levers which we have strategically been pulling in the last few months to come back to where we should be coming. The three important levers is recognizing the downward pressure on margins, the constant focus on steadily improving CASA has been probably the most important lever, which is going in the right direction. The steady contribution incrementally coming from fees to total net income. Again, we have seen a 6% growth from December last year, and the rigorous focus on cost management, not cost cutting, cost management. I think on a normalized basis, we have managed to keep it at 10%. In today's environment are three important levers which we have been focusing on, and those three levers are anchored with two very important foundations: the positive outcome and expectation for loan growth, which we have seen really spiking up in the third quarter, which we are very firm looking at the October numbers. The way forward for December is also going to be in that direction. And secondly, to narrow the gap between the loan growth and the deposit growth. I think with that foundation, we believe that we will end up 2015 with a firm footing in terms of core banking, which will pivot us to go where we expect to go for the full year 2016. So that, I think, is an important message we would like to share with you as important stakeholders. This particular analysis is a detail showing some of the contributions coming in from fees and non-funded income. Again, you can see the capital market cluster, the retail bank is growing in, and the corporates are equally contributing aggressively. Project finance tends to be more funded, so it's contributing less. And you can see, unlike last year, there is more contributions from core banking than the gain from financial investments, which gave a whopping 1 billion last year, and this year it's more modest to around 300 million. Again, as I said, these numbers have been shared with you in my commentary in terms of the expense analysis. 17%, but if you take away the OPEX loss and the deposit free insurance normalization is around 10%. The impairment again and percentage of gross loss is at 2.8%, which is still much less than some of the comparable peer banks. I think you've seen some of the results coming out in some of the bigger banks, and those numbers are certainly north of the 300 basis point levels. This slide shows the growth on the loan side, and I think we're seeing the contribution coming quite healthily from all the sectors. We are seeing a very deep project finance pipeline, which is contributing by almost 40% there. Retail and SME are starting to kick in, especially in terms of housing, auto loans, and the lifestyle loans. The retail and SME book, if I look at the 12 months, contributed 35% up to 2014 September, and today it is at 38%. We are seeing a steady improvement in the contribution that particular sector. It's important also, as I said, in the retail side, we had housing steadily improving. Auto loans, robust, and lifestyle loans, that is our dream maker, is continuing to play its dominant role, which is a reflection also on the incremental spend we see in the hands of our common consumer. So that's a positive sign. And secondly, on the SME side, we are seeing some interesting, I think the value chain, the supply chain impact certainly is working well for NDP. Most of the growth we are seeing in SME is coming from the cluster of SME customers which are engaging in supply chain and linking with our corporate and wholesale banking. So it's been quite positive. The asset quality, when we look at the industry still, we see the curve less than the industry. If you look at the sector-wise contributors, the three visible contributors are the bottom right-hand side graph, the bottom three bars. The rubber and leather production reflects two companies, one an RPC and the other one in footwear. Yeah. The RPC is provided, but we don't see an impending loss looming there. It's a impairment based on the way we interpret cash flows as a prudent matter. But in terms of the footwear factory, that particular factory is currently closed, so we have made a provision there, but we are currently in engagement along with that customer with a series of private equity investors, along with another industry player with the objective of reviving that particular industry and that particular company. So we remain cautiously optimistic. As a prudent matter, we have provided for that. On the wood and paper, it is the same specific company which we provided, I believe, in the end of 2013, and it does not reflect the industry phenomenon. It's a very specific one. And on the textiles and garments, this relates to one particular, what we call mid-tier apparel manufacturer. Again, we have cautiously, as a matter of caution, made the provision. But again, this business is ongoing. It is bringing in the sort of cash flows. It is in business. It will be monitored carefully, and let's see how the company performs in the fourth quarter, and maybe also with the resurrection of the EU GSP Plus, we see the possibility of a turn in Q1. But I think we are taking it head on in Q3 now, and whatever positives come, hopefully will come in terms of a reversal, not in Q4, but perhaps in the first or second quarters of next year. Customer deposits again showing a steady growth. I think from year on year, it's a 13% growth. The important thing is on a 5 years, it's a 26% CAGR, and the right-hand side curve shows you the overall blended CASA for rupees and foreign currency, which is again showing a 2.6% growth in 9 months. Our aspiration is to cross 27 to 28% by year end and target the mid-30s in 2000. CASA is a very important area for us. Okay, the external recognition, I think we are very pleased this year to have 5 or 6 very important rewards, and I think the champion, the pinnacle there is the Global Fair Finance Award, which we, I think, obtained. This award which was successfully defended by one of our larger peer group competitors for 15 consecutive years. So I think that was a very pleasing recognition for us. I think it has motivated the entire staff to look forward to greater things in the next couple of years. And I think the right-hand side top award represents our commitment to the SME sector. And the bottom left, I think, demonstrates our commitment to your segment as a investor relations stakeholder group. Our commitment to professionalize this function year on year and improve ourselves by constantly engaging with you, receiving constructive and objective feedback from you as to how can we better our presentation and communication with you more regularly in a manner which makes sense to you. So that is a tribute to the manner in which we have consciously adapted engaging with you as a stakeholder group. And of course, the ALM, which is, I think this award which was given by FMO last year to us, already this year, reflects the caliber of the ALM team in the bank. And okay, this year we haven't had the same opportunity as last year, but it demonstrates the robustness of the skill set in the bank, which can be deployed at the right time when the window of opportunity arises. And of course, our sister company, our subsidiary, NDB Investment Bank, has demonstrated its resilience to outperform and maneuver the entire industry by being recognized as the Euro Money Investment Bank of the Year for the fourth consecutive year in Sri Lanka and for the third consecutive year. I think it again demonstrates our significant commitment to capital market activity as we look at a renewed Sri Lanka. So that, ladies and gentlemen, concludes the formal part of the presentation. I would now like to open this session brief to chat, and we will attempt to respond to our best of us. What I would appreciate is for those of you who are making the posing the questions to first identify your name and your institution. So, yeah. Perhaps while you all are pausing for questions, let me also take on one issue regarding super gains tax. We came out in December 2000 with the full year 2014 as part of the notes to the balance sheet by quantifying the possible impact of super gains tax based on the 2014 full year, which I believe was quantified at 864 million rupees, 54 million. I think that number has not changed. I believe that we have made the first payment in November, 30th of October, in compliance with the applicable current regulation. And in terms of accounting treatment, as agreed by the Institute of Chartered Accountants and the industry, the payments to for supergains will be a debit to reserves. It will not come through the top line, it will be a bottom line below the line. I can see some questions on chat. Let me take them one by one. Whether we could elaborate the impact on ALM and operational loss. So let me take the operational loss first. The operational loss is also a very specific instance where an individual working in a particular branch in Metro Colombo sought it fit to uplift some fixed deposits belonging to uh, fairly inactive customers by literally forging signatures. And also, I believe that these monies were transferred by opening some savings accounts in connivance with a couple of outsiders who are now in custody. So this is not a reflection of a shortfall from the bank in terms of a weakness in the operational control framework of the bank. It is a reflection of connivance. And as you will appreciate, if there is connivance, there is very little one can do to attack it or prevent it. But all we can do is when we identify it, to go all out and make sure that the persons concerned are punished by the applicable law, so that a message goes both internally and outside that one does not mess around and it doesn't pay to mess around. I get another question about the impact of mark-to-market losses from the bonds. All in terms of the 9 months, could we have a quantification of that? Less than. I'm just told that the impact on mark-to-market is probably less than 100 million. Yeah, in relation of course to the peer group of banks, but I think it's less than 100 million. There's another question from Udishan from Capital Lions. Okay. I think we just answered Udishan the impact on the bond trading loss. I think ours has been very robust because the portfolio is not as extensive as we have not taken aggressive positions as opposed to some of the market players. And in terms of the rupee depreciation on the company's performance, 7% depreciation. I don't think that has really shown.
We made a moderate gain from.
I think in our case, I think we have actually seen a moderate gain on the as a result of the depreciation. It's not been a negative impact. It's actually been a modest gain. But what that gain has been reflected in the SCBU book, which is reflected in dollars and not in rupees. But again, as you will appreciate, I don't think it is a good core banking strategy to either profit or make a loss from appreciation or depreciation of the rupee. We have got to be mindful of the rupee movement, but I don't think we take pride in saying we have made money out of it. What was the total operating loss from the internal fraud? As I said, it is 173 million rupees, fully provided in the 30th of September now. There is nothing there is a question. What was the impact from change in revenue recognition policy during the quarter? I'm told by my head of financial accounting that it is not material, it is probably less than 10 million. It's really encouraging to see the sort of diversity in questions we pose, which I think which helps us to also be what was the total? Yes, I think the super gains tax question has been answered. It's 854 included for the full year. Fourth quarter numbers, it will, in terms of impact, it will not impact the P&L, Mr. Khan. It will only be a charge in reserve. And There's a question whether it will be paid in installments. No, I think the bank has sufficient firepower in its balance sheet. It will be paid in two installments.
Nothing to
That's as per the
the law.
Indian law.
Yeah.
Okay, I'm told that the first installment is already paid on the 30th of October. Within the applicable Indian revenue direction, it will be paid
By
in further two installments to be completed by 30th of December. NIMs have declined to 2.75 during the 9 months, well below the industry average. As I said, I think NDB has been very consistent from perhaps the last 3 years. If you look at our NIMs vis-a-vis the peer groups from 2011, you will see that NDB's NIMs have always been maybe 100 to 150 basis points less than the industry. Against that, there were a couple of attributes. The quality of the portfolio has been far superior. And secondly, if you look at the NIMs, certainly of the peer group of three or four banks which we benchmark, the big three private sector commercial banks and maybe one other foreign bank. If you look at the composition of the loan book, our project finance and corporate book has historically been around 64-65% as against maybe 35 to 40% by some of the bigger banks. So naturally, some of the bigger banks have always had a better blend in their asset classes, contributing, the retail and SME contributing more. But if you look at the evolution from say 2011 to 2015, that is gradually reducing while SME and retail is consciously improving its contribution. And that would be, along with CASA, the main two levers which we will use to defend and arrest the downward pressure on margin. Another question. Suppose the central bank raises rates in December, still would NDB be able to maintain loan and deposit growth rate? I think yes, that is not an issue because we have a sufficiently strong loan growth pipeline in project and corporate finance banking, which are more variable pricing, not fixed. So that I think will be passed through. And I don't think 100 basis points or so, if at all, increased by the regulator will have an impact too much on our retail banking and housing because it's still affordable. Mind you, 2 years ago, housing loans were going at 15%. Today it's at 10 to 11%. So there is still some bandwidth and cushion for housing and loans. Lifestyle loans are a bit more consumer oriented, and it is mainly to do with impulse of individual. And I think today affordability is there, and people are spending towards a better lifestyle. And we still believe that a moderate increase in interest rate, if it does happen, will not hamper the type of loan growth which we expect to realize within now and the years. I think we have not seen or heard of any other questions, ladies and gentlemen. So I think we'd like to thank on behalf of the management to all of you who have logged in and also asked some very constructive questions. And the important thing is the takeaway from us is your objective feedback and your constructive engagement with us, and for us to be consistent in our story and coming out to you whether we have a brilliant year or a bit of cloud hovering around us, and to be able to convey the fact that our radar on a 4 to 5 year strategy remains unshaken. We may from time to time have to raise or release the foot from the accelerator, which reflects agility. Focus on our medium-term strategy for 2018 remains unshaken as a board and management. So thank you very much for your patience. And if there are any further questions, if any of you would like to pose, you may send it through email, through the web, or contact Mudari and the investor relations team. We will be more than happy to take on and clarify. Thank you very much for your, and have a great day and weekend. The last question was, what is the targeted branch network? I think we are targeting to 100 branches by December.
100.
And then the locations have been identified, staff have been recruited and trained, systems have been procured. We are very much on target to go. That is organically, folks. Thank you.